Hello and welcome to your lecture on Learning Outcome 13. This is also based on percentages. In this lesson, you're going to be able to calculate amounts of money, compound interest, percentage increases, decreases, and discounts, including tax and simple budgeting. So let's get started. Okay, so what we're going to do is we're going to start by looking at repeated percentage change. Now, what you need to do, if you haven't already, is watch the Learning Outcome 5 and Learning Outcome 6 video on percentages, because that will really help you before you come on to this. Okay, now we've looked at finding a percentage of amount and we've looked at percentage change in that video. But now what we're doing is looking at repeated percentage change, which is based on compound interest. Okay, so we'll start here and we're going to go through some income tax questions as well and some compound interest questions. Now, this can be a little bit difficult, so just be careful and bear with. A quantity can increase or decrease in value each year by a percentage. If the percentage change is repeated over successive years, meaning over multiple years, the original value changes at the end of each year. The example shows two methods of calculating repeated percentage change. The second method uses a multiplier and is usually quicker. Okay, so we'll go through both methods. It says here, Alex paid £12,500 for a car. Each year it depreciated in value by 15%. What was the car worth after 3 years? So, method 1. A lot of students go about this in quite a long-winded manner, which is fine. But it's saying that I need to work out 15% of 12,500 and then I need to subtract it. Okay, fine, we can do that. So in order to find 15% of 12,500, we can either do 15 divided by 100 times 12,500, or we can recognise that 15 out of 100 or 15% is 0.15 and just times that by 12,500. Okay, if we do that, we end up with £1,875. So after the first year, year 1, it decreases by £1,875. So I need to do 12,500 take away 1,875. If I do that, it gives me 10,625. Okay. Then I would have to do all of that again for year 2. Okay. So year 2, I'm going to do 15% or 0.15, and I'm going to take it away or work out what it is first, but I need to work out what it is of this amount. This is my new amount now. So I've worked out 15% of 12,500 and I've took it off. So after year 1, the car is worth £10,625. After year 2, I need to do another 15%. So I need to do 0.15 times 10,625. That gives me £1,593.75. Okay. So then I need to take that away from 10,625. Okay, that gives me a total after year 2 of £9,031.25. That's after year 2. And then year 3, I'm going to need to find 15% of that amount. So 0.15 times £9,031.25, which gives me a total of £1,354.69. If I then take that off of last year's amount, 69, it gives me a total of £7,676.56. So after 3 years, this is what it's worth. Okay, because we've depreciated it 15% every year. Now that's really long-winded, and although you'll probably get quite a few marks, you're spending quite a lot of time working out different percentages on your calculator. Okay. Yes, okay, we've used 0.15, which has helped us instead of doing all of this. We automatically knew it was 0.15 because it's 15% off. However, I'm just going to show you another way of doing it. In fact, maybe 2 more ways, because I just want to show you another way of depreciating it by 15% every year. All right, and then I'll show you how to use the quickest way. So, I'm still going to call this method 1 because it's the same. I'm just doing it a bit differently. Instead of using 15%, I'm going to say that the car is, instead of working out 15% of the amount every time, I'm going to say, well, for year 1, I need to know 85% of the value. I don't need 100%. I need 100 take away 15% because I'm depreciating it by 15%. So year 1, I'm going to do 12,500 and I'm going to times it by 0.85 instead. If I times it by 0.85, it gives me 10,625 for year 1. For year 2, I will take my 10,625 and I would times it by 0.85 again. Again, the reason that it's 0.85 is because I'm depreciating it by 15%. So this stops me from having to work out the 15% and then subtract it. It just gives me the answer straight away. So if I times 10,625 by 0.85, it now gives me £9,031.25. That's what we got before. And then finally in year 3, we would take the £9,031.25 and times it by 0.85 for our last time, giving us £7,776.56. Okay, which is what we got before. You're just not having to work out 15% and take away because you've just taken the 15% away from the 100 to give you this percentage, which we've written as a decimal. It must be written as a decimal. If you write it as 85, you're going to get really high numbers. Okay, so those are 2 very good methods that you should really get your head around anyway because it will help you understand percentages a lot better. However, what I'm going to show you now is even better. You're going to have to definitely use your calculator for this, but this is method number 2. Okay, those 2 that I just shown you are kind of similar. So method number 2 is where we use a multiplier, a proper multiplier. We've been using multipliers in a way, but this one is much, much quicker. So if I'm depreciating a value by 15%, it means that I only want to know 85% of the price. Okay? Fine. As a multiplier, we know that that's 0.85. So what I'm going to do is I'm going to take my 12,500. I'm going to times it by 0.85. Sorry. Don't really need the brackets, 0.85, but I'm going to put that to the power of 3. On your calculator, all you would do is type in 12,500. You would then press times and you'd then press 0.85, but you'd then press your x to the power of, I think it's either an x cubed button or it's an x to the power of that little box. And once you get that little box, you can put the 3 in it. Okay, and it comes out with this. When you press equals, it will give you the final answer, £7,676.56. You've not had to do any of that other working out. You'd literally typed in one thing and you've got your answer. It's this 3 that represents the amount of years. Okay, this is your multiplier. And this is your original amount. And that works with lots and lots of things. Okay? Okay, now, I just need to quickly point out that if you are increasing, okay, let's say I had a bank account, if you like, and my bank account had £8,000 in it, and it increased every year by, let's say 15%, that will never happen. But let's say 15% just for this reason. Okay, I'll show you some more like this in a minute. Your original amount would be 8,000. Okay, so your original amount, 8,000. It would then be times by the multiplier, but instead of it being 0, okay, and we're increasing here, so we need to increase it by 15%. Okay, so that's technically 115%. So here I decreased by 15, so I took it away. Here I'm increasing by 15, so I add it on. As a decimal, that's 1.15. So my multiplier would be 1.15. And then my amount of years, let's say it was 3 years, again, would still go there. So the only difference is when you are increasing, you write the multiplier as you add the percentage onto 100% and write it as a decimal. And when you're decreasing, you take it off and write it as a multiplier. Right, let's have a look at another example then now. So in 2009, experts estimated that the UK hedgehog population to be 1 million hedgehogs. Hedgehogs are now on the endangered species list as their numbers are falling by about 5% per year. Estimate the size of the UK hedgehog population in 2019. So what we need to do is we need to realise that it says here, experts estimated that there are 1 million hedgehogs. So we start with 1 million hedgehogs. And they are now an endangered species with the number falling about 5% per year. Okay, so they are decreasing by 5% each year. Now, if we're going to use our multiplier method, because this is quite a big question, I don't want to have to work out, it looks like 10 years worth of decreases of 5%. What I do instead is, because it's decreasing, I do 100 take away 5. That gives me 95%. And as a multiplier, that's 0.95. So I'm going to do 1 million times by 0.95. So this is my original amount, remember? Original amount. This is my multiplier. And then I'm going to put that to the power of how many years? From 2009 to 2019, that's 10 years. So it's to the power of 10. And on your calculator, you would type in 1 million times 0.95, and then you would definitely have to press that button with the little box, and you'd put 10 in that box. You'd then press equals on your calculator, and it will give you your answer. Your answer was 598,736.9. And if we round that, we can say 598,737 hedgehogs in 2019. Okay, so remember, if we decrease, the multiplier is, written with 100 take away the percentage. But if we increase, so if it increased every year by 5%, our multiplier would be 100 plus 5, which is 105. And as a decimal, that's 1.05. Okay, the decimal always goes in the same place. Okay, let's move on then to some interest and tax questions. This will also help you with some more of these types of questions as well, these increase and decrease using a multiplier. So, £3,200 is invested for 4 years at 3.2% per year, per annum. How much simple interest is paid in total after 4 years? Now, simple interest is where your interest is just added on for the 4 years. So it's not compound interest, which means we won't be using a multiplier for this question. So all you need to do is, it says that you've got £3,200 and it's invested at 3.2%. So remember, we need to find 3.2% of 3,200. Okay, so we do 3.2 divided by 100 times by 3,200. Okay, or we might recognise that 3.2 as a decimal, we'd definitely recognise it once we'd done this bit anyway. So 3.2 divided by 100 is 0.032. Okay, so we would do 0.032 times by 3,200 and it gives us £102.40. Okay, so that's for 1 year. We need it to be for 4 years. So all we do is £102.40 times by 4. That gives us £409.60. Okay, that's a 4, sorry. £409.60. Because simple interest, we just find the amount of the percentage we need and we just add it on. It then says how much is in the account after 4 years. So we take our 3,200 that we originally had and we add on the £409.60 that we've just worked out. In total, that would give us £3,609.60. So you must remember that in the exam, that if you get simple interest as one of your questions, you will just find the percentage, simply like we did at the beginning of the video, find the percentage of the amount, and then you just multiply it by the amount of years. Okay, times by amount of years. And then you add it on to the original amount. Okay, that's simple interest. Now then, that differs though to compound interest. When a bank or an account offers compound interest, interest is paid on the interest already earned as well as on the original amount. It's basically a repeated percentage change, a bit like what we were talking about when we were doing the hedgehogs or the car prices. So if Becky has £3,200 in her savings account, she receives compound interest at 3.2% per annum. How much will she have in her account after 4 years? So all you need to do here, because it's compound interest, we're going to start with our original amount. Original. And it says that every year she gets 3.2% interest. Okay. So that's an increase of 3.2%. And because it's an increase, remember, we add it on to the 100%. We get our original amount, which is the 100%, plus the 3.2. So in total, that's 103.2%. As a decimal, that's 1.032. Again, we just move the decimal point back 2 places. So we're going to times that by 1.032, but it's over a course of 4 years. So we're going to do it to the power of 4. And if you put that into your calculator, you will get a final amount of £3,629.68. So she will have £3,629.68 after 4 years. Okay? Right then, what about this question? So this is a really good one for you to have a go at. So pause the video and work out the difference. It says, Shamil invests £3,000 in each of 2 bank accounts. The terms of the bank accounts are shown below. I keep making mistakes here, shown. Shamil says that he will earn the same amount of interest from both bank accounts in 2 years. Decide whether Shamil is correct. The first bank account is the Savvy Saver. It has simple interest at 2.5% per annum per year. Money Grows has a compound interest at 2.5% per annum. Okay. Now, although it's probably obvious to you which one to say, you need to show you're working out. So pause the video and have a go, and then press play for the answers. Okay, if you've had a go, let's start with the Savvy Saver. So the Savvy Saver is 2.5% interest. So that's simple interest, which means we just need to find 2.5% interest of £3,000. Okay, so 2.5 out of 100 times by 3,000. Okay, if you did this bit here, it'd be 0.025 times 3,000. 0.025 times 3,000 is 75. So he'll get £75 interest every year. Well, we're doing it over 2 years. So £75 times 2 is £150. Okay? So after 2 years, he'll have £150. Now, that's for the Savvy Saver. For Money Grows, it says that he gets compound interest of 2.5%. So remember, that means he gets his £3,000 and then he gets 2.5% increase on top of his 100%. Okay, so what I'm going to do is I'm going to say, well, that's 100% plus 2.5. So that's 102.5% he'll get. And as a decimal, that's 1.025. So I'm going to do 3,000 times by 1.025, and it's over 2 years. So I'm going to do that to the power of 2. So on your calculator, you should have this x squared button. So you'll type in 3,000 times 1.05, and you'll just press that. Then you can press equals. Okay. If you press equals, it gives you £3,151.88. So you've worked out how much he gets in total using the compound interest. We just need to go back to the simple interest and say, well, he had £3,000 originally and he made £150 interest. So that's 3,150 pounds for that one. So as you can see here, he made an extra £1.88. Okay. Shamil is not correct. He would earn a £1.88 more with the Money Grows investment. Okay. So we just need to be very careful how we're doing those. Your simple interest, okay, is you just find the percentage of the amount and you add it on. Okay, if it's for 2 years, you add the same amount twice. If it's compound interest, figure out the multiplier by adding the percentage on, and then turn it into a decimal and put it to the power of how many years. You can definitely use your calculator for that one. But you can use your calculator for both of these usually. All right, let's look at some national insurance then. National insurance is usually deducted as a percentage of a wage or salary. Manisha earns £1,575 a month. National insurance at 11% is deducted. How much national insurance must she pay? Okay, so that's not too bad a question. If you'd like to do that one, you can. It's very simple. It's back to the beginning of what we were doing, but it's just about national insurance. Right, if you've had a go, again, you could do this by doing 11 out of 100 times by 1575, which is 0.11 times 1575. Okay. And if you get that, that is £173.25. Okay, that's how much national insurance she has to pay. Done. Income tax. Income tax is another kind of question that you might get. So a percentage of a wage or salary is deducted for income tax, which goes to the government. Before tax is calculated, a personal allowance that is not taxable is subtracted. The standard personal allowance in 2016 was £11,500. Income tax is then charged at different rates. So basically what it's saying is if you earn £25,000, you get to keep £11,500 of it that's not taxed. The rest of it you'll have to get taxed on. The table shows the tax rates for each band, sorry guys, in 2016 to 17, if you have a standard personal allowance of £11,500. So, if you earn up to £11,500, you're not taxed at all. If you earn between £11,501 and £45,000, you're taxed at 20%. So you keep the first £11,500, the rest is taxed at 20%. Any money over £45,100 up to £150,000 is taxed at 40%, and any income over £150,000 is taxed at 45%, which is a lot. The government are basically taking half of the rest of your money off you. Very annoying. Now, here is a question for you. Will earns £190 per week. The first £62 is not taxable, but the remainder is taxed at 20%. How much income tax does he pay each week? Okay, so pause the video and have a go at that. So if you've had a go at that, you'll notice that the first £62 it says is not taxable, but the remainder is taxed at 20%. So what we would do there is we'd work out how much is taxable. So we would do £190 and we would take away £62, leaving Will with £128 a week. Now, because that's quite a small amount, we'll only use the 20% tax bracket. Obviously, it tells us anyway, it's taxed at 20%. So now we need to work out how much tax he pays per week. So basically, we need to work out 20% of £128. So we could do 20 divided by 100 times by 128. Or, if you know the decimal, which you should, it's 0.2 times 128. 0.2 times 128 is £25.60. So Will pays £25.60 in tax per week. Okay? Alright, so that's kind of like a simple income tax question. So now I hope you feel confident in doing calculations with money, compound interest, increase and decrease, as well as discounts, including tax and simple budgeting. Okay, so good luck. I'm looking forward to seeing how you do on the assignment this week.